Hello and welcome to the PLDC Wealth Management Podcast, The Wealth Explorer, where we're dedicated to empower the next generation to take control of their financial future.
If you're navigating the complexities of finance, it can feel overwhelming.
But here's the thing, building wealth isn't just about numbers on a spreadsheet. It's about realizing your dreams and aspirations.
We're speaking directly to the movers and shakers of tomorrow, the go-getters who are ready to turn their ambitions into reality. Whether you're just starting out in your career, launching a business, or planning for a major life milestone, like buying a home or starting a family, we're here to guide you every step of the way.
Now you might be wondering, why do I need a financial professional? It's simple. Having a trusted advisor in your corner can make all the difference when it comes to achieving your goals.
But beyond the numbers, it's about peace of mind. It's about knowing that you're on the right path towards a secure and prosperous future.
So join us as we explore the world of finance, demystify the jargon, and empower you to make informed decisions that will set you up for success. Whether you're a millennial, Gen Z, or anyone in between, it's never too early to start planning for tomorrow.
So let's embark on this journey together and unlock the possibilities that await. Welcome to PLDC's Wealth Management Podcast,
where your financial future starts now. Hello, everyone, and welcome to the PLDC Wealth Explorer. I'm Michael-Anthony, joined with my co-host, Gabriela and Michael-Anthony.
Hey, everyone.
And today marks the beginning of an exciting journey for us, not only for us, but for our listeners. In this inaugural episode, we're pulling back the curtain to give an intimate look into who we are, what we're doing, where we're headed. At the heart of financial planning lies two fundamental pillars, trust and communication. We believe that building a strong relationship with your financial representative is paramount. And that starts with getting to know the people behind the advice. So who are we? What drives us to do what we do? Where do our passions lie? And what are our aspirations for the future? Let's get into it.
So tell me, Michael, how did you get to where you're sitting at today? How did you start this podcast? So bring me to your journey.
You're asking me that now?
Yeah.
Why?
Because I want to know.
Why are you holding the microphone?
I don't know what to put my hands.
What do I do with my hands?
Like, do you not know what to do with your hands? You don't tell me the truth.
I'm putting mine down here and I'm just like holding a hip and
because like I watch a podcast and sometimes they just hold the mic like this.
Yeah, I mean, you could hold it. So I've been doing finances for over 2 years now. I've been doing something else. Originally, I was part of an IT company prior to switching over. Obviously, COVID changed a lot of things for a lot of people, and it was the time for me to do the switch. So I've been doing this for the last 2 years, and I've recently also been licensed for mortgages. So now I have my mutual funds license, my mortgage license, soon to have my life insurance license. And this is all with the hopes of being able to help people I know, people I care about, because, you know, one thing that's really hard is finances. Like before even doing this, even though I had family in finances and whatnot, it was complicated. It was hard. So that's who I am. That's what I do. I have a family. I have two young, lovely young girls and a lovely wife. And
you're pretty lovely, I have to say.
Thank you. And a dog who's with us. You're probably going to see her in the frame at some point. She likes to just mosey around. So that's a little bit about me. And tell me about your life journey. How did you get here? What is it you hope to do? Provide for everybody around us? Like, what are your goals?
So yeah, I'm a recent graduate in finance. I finished my bachelor's degree not too long ago. And for myself, I was just always understanding kind of the concept of money and growing up. And, you know, I always had my family members encourage me to save money from a young kid just at birthdays, put your money aside and watch it grow. And I always was very much entertained by that concept, and it was always something, even as a little kid, I was trying to like share with my cousins or my siblings or whatever the case may be. So I was always really entertained by that subject. So as I grew older, I knew that this was more or less something I wanted to do. Did I know exactly? No, but I always was attracted to saving money and watching it grow. Like that concept to me was miraculous, and I quickly understood that not many people knew how to do that.
Yeah.
And the one thing I enjoyed while I was growing up was watching, like, every time you help somebody do that, like, all of a sudden they're happy.
Yeah.
Right. So for me, I went and do my bachelor's degree, and while I was doing my bachelor's degree, as much as I didn't really like the learning process of it, I really wanted to work. So I decided to work full time and go to school full time. So I worked at the bank. In my banking career, I worked customer service, and then I quickly became a financial advisor to gain my experience, always knowing that I wanted to do more in my life. And then, as I was approaching the end of my degree, I really started to think of like, hey, what's the next step for me? Like, how can I really, like, I just did something, going to school full time, going to work full time. And I felt like that was already accomplishing on its own. And I felt like people were being inspired a little bit about the things I was doing. And I was like, okay, well, now what's the next step, right? And, I had a long conversation with my mom, obviously. And, back and forth, just saying like, is it the right time? And ultimately it was just that leap of faith that decided to say, hey, like, if you want to do anything with your life, and if you want to really make an impact, you got to show that you're willing to take the risk. You got to show that, you're willing to be uncomfortable too. Right. So, I just hopped out and I said, okay, well, I'm going to ditch the 9 to 5. I'm going to ditch what I know, what I've known for the last 4 years. And I'm going to show like, if I'm ready to help people get to where they want to go, I also have to take that leap of faith. So for me, that was the biggest thing. It was that change that everyone is so scared to do. And being fresh into it, it's still scary. But I mean, every day you realize, hey, I just got one day better. And okay, yesterday was yesterday and today's a new day. And what can I do today just to get myself better? So
I completely agree. I felt about the same when I was switching over, because ultimately I wanted to do something to help people. And what I was doing right before switching, it was helpful. It was good, but I didn't feel I was making the maximum impact to the people around me. I couldn't feel the impact from the people around me. What's great about finance, especially personal finance, and just like you mentioned, like you were helping them figure out how to save and stuff. Like it makes you feel good to help somebody save money and like build to their future. And like I have people that came to me like, hey, I need help with it. I'm like, and every time I help them, feels amazing. It's so great.
I really do think that we probably have the best jobs in the world. We get to help people make money, and we get to make money at the same time. Like there's no sugarcoating how great our job could be. And I think my greatest story from the bank was watching somebody that came in, and she was a single mom. She was divorced. Obviously she had a son, and at that time, because she had just gotten divorced, like she was quite in debt, and she came in, she was distraught. She had like a whole trouble with another bank, so she was switching over, and I was just there to listen to really what was going on with her. And she came in with $13,000 of credit card debt, and obviously first thing you think of is, hey, let's consolidate, let's help you save some money. And she goes, I'm gonna pay it off. I'm gonna pay it off. And I watched this lady pay off her debt in 13 months just by working hard. She was a dental hygienist, so she was working extra hours, and she would come and see me frequently. Like I would say every 3 months we had a meeting, and 13 months later she had her debt fully paid. We started a systematic savings plan, and I helped her buy a property. And to me, it was the most accomplishing thing. And it's not really because I did anything, but I just gave her the few little tips of advice. Her motivation really took her all the places. She was determined. She had, all those qualities that you hear of, right? Like you need to be disciplined. You need to, you do the right things, you're going to get there. She got there. And I think that's my greatest story from working at the bank in 4 years. It was great.
Cool.
So the goal for us is, and I think I speak on behalf of Michael here and the rest of our team, is, just continuing those stories, right?
Like building, having like when we retire, having a huge volume of stories of people that we helped throughout our career. That would be amazing to leave as a legacy for sure.
I mean, I think my biggest happiness comes from her. So I think
that's awesome. Yeah, we could keep the ball rolling. We have more of those stories for sure. So building off of something that's already existing, what's great about the story you just shared is the fact that we're part of this team, PLDC Wealth Management, and Maria Leo, your mother, and Antonio Paolozzo, my father, they've been doing this for over 25 years now, and they have a laundry list of stories very similar to what you had just shared. What is PLDC going to be able to do for everyone? Like, what are some of the services that we're able to offer to people right now?
So just a little background. PLDC has been around for 25 years and counting, obviously. And like you said, both our parents, your father, my mother, founded this company after doing careers at the bank, and really wanted to kind of lead the way themselves as well, right? And much harder to do back then than we're maybe continuing in their footsteps. But yeah, they've been servicing people for the last 25 years plus now. And a little bit about what the company does at this point in time is we're there for people. So in every aspect we could possibly be. So we go from financial planning, which is I guess the fundamental base, right? So we do anything like investments, personal investments, life insurance, different types of insurance needs as well. So not just life, but critical illness, disability insurance, and all that follows with that. We also extended our line into mortgage solutions. So those looking to buy a house, refinance, renew their mortgages. We've become a brokerage service for that as well.
Yeah. We pretty much became a bank to help everyone with all their anything that has to do with money. We're pretty much doing at this point, which is great because at least for people, it makes it a lot simpler. You don't have to go running to 1,000 places. You just go one team and boom,
not my favorite line to say, but I guess the simplest way to say it is it's a one-stop shop.
It is a one-stop shop. Yeah.
Although we're not a shop, and the goal is not to have people shop around. It's really, again, it's giving advice. And I think something that you're, doing a lot of meetings with your dad recently, something that Tony always says is, we're here for the relationship. We care about your well-being because your well-being is our well-being, right? If you're happy, then obviously at the end of the day, we're happy. If you're not happy, it's not as easy going to bed at night. So
just like what we're doing right now, like we're currently going for our licenses for life insurance.
Correct.
And what is great is that the team is vast in terms of the knowledge that we have, but it's also great for the fact that we become experts in specific fields, and we are able to lend that information and lend that technical expertise when it comes to different cases for clients. And what I like is definitely the teamwork. We're working together on specific cases. Like, this person's got this, I need to have help with this part. And we all work together. Like, we're constantly doing meetings, all four of us, with those kinds of things. That really, I love that teamwork too. So that's what's great about how we're set up at the moment.
Exactly. And on top of the personal aspect, we also do for businesses as well, right? We offer group, exactly. So group RSPs, group TFSAs, and as well as group insurance plans for any business owner out there looking to provide for their employees as well, and offer that luxury benefit, I guess you can say.
Lifestyle benefit. It's for their lifestyle, I guess. I don't know.
So one main question people may have is, why does it matter to be part of PLDC? Why does it matter to be part of this team?
So whenever I think about finances and or actually, let me back it up. I see a lot of people today, our age, a little bit older, whatever, that have access to different apps like Wealthsimple and all these other apps, Robinhood, whatever. They could do investing on their own. And for me, you could do it on your own. You might have some success, but it's kind of like training at the gym. You do it on your own. Eventually you get tired. You don't feel like doing it. Or in the case of financing or finances, emotions come into play. Like, you're going to be very emotional about whether or not you want to invest in crypto or whatever. Like, a lot of these things, like when we're doing things, it's all emotion based. So finances, and why it's important to be part of a team and to offer these services, especially, it's kind of like having a coach in your corner. You want to have someone who's going to keep you accountable, who's going to be there for you, who's going to help you with all the different nuances of the financial world and like what you need as services. And beyond that, it's really just so you have somebody to be there for you in your corner. And since we're a team, especially, you'll know that the ball won't get dropped. We're all there. People could go take vacations, and there's still going to be people there to help you out if you need anything. So instead of going with somebody who's 100% solo, they could do it, but that person's constantly working. And if they burn out, well, that person's not going to be able to answer you within 24 hours of like, oh, I need my money and whatever. Well, that's another reason why we're part of a team. We're able to cover each other's back. And like you're there to cover for when I'm not there, or I'm there to cover for when you're not there. We're there to also make each other better. So that's why PLDC, and especially working as a team, means a lot for people who are investing today. Like you don't go in solo. Don't go by yourself.
I just also feel like more and more our generation, we're becoming a lot more, maybe for a lack of better words, insecure about our future, because sometimes it feels so out of reach. So making sure you do have that one person or that team to speak with and trust into. And again, the word trust is so heavily used because trust is very important, right? The same way when you go see I'm going to use your example, your trainer at the gym, you want him to know that, or her to know that they're working for you.
Yeah.
And they're I knocked my mic.
Okay.
But they're working to help you, all else put aside in that hour of session, right? So same thing when you're dealing with your finances, especially because it's such a sensitive topic to most people, because, not your fault, but education is lacking in this subject, right? There's now so many voices on different social media platforms about what you should be doing, where you should be invested, and X, Y, Z, that it's now even more overwhelming. You want that person to say, hey, this is what you need.
Yeah.
Yes, there's all these wonderful things out there, but what's most comfortable for you? And before maybe you're going to start deadlifting, you're going to start lifting up some dumbbells, right?
Yeah.
Same thing with finances. Before we start getting you onto extreme markets, right? We're going to at least start you off by just doing the basics and putting a certain X amount of dollars aside, right?
What's really funny is like, we're making this reference between gym and like working out. What you want. Like, for example, for me, or a lot of people are like, I just want to lose weight or whatever. Like I wanted to get fit. I wanted to be in shape, be there for my family. Do I know how to do it? Yeah, kinda. But I know that I wouldn't be able to achieve the level of what I have in my mind if I didn't have help. And what is funny about finance is that like, I even tried it myself, Wealth Simple and stuff, before I even started as a financial advisor. I was like, okay, let me put some money. Let's see if I could, whatever. I see all my friends doing it. Like, why do you think people feel that they have to do it on their own? Like, I just doesn't make any sense to me why you would want to do it by yourself and like run the risk. You're still paying fees with these companies. You're still going through like hoops. You're potentially even losing more money and having more stress. Like, why do you think people want to do it by themselves?
I think people want to do them by themselves. Again, going back to not knowing and the fear of saying like, I don't want to look stupid in front of this person that seems to know so much.
So I got to do it too. And like, let me,
right. Let me not look stupid in front of somebody who like, I don't want them to judge my finances. And one thing I tell people all the time, okay, think about a hairdresser, or I'm going to go with a hairdresser. Okay. A hairdresser sees different types of heads a day, right? They see people with itchy scalps, dry scalps, or whatever the scalp may be, whatever color of hair this person may have. They're so used to seeing hair, nothing is registering, oh, this person is dirty or not, right? Unless obviously you have that extremely dirty person, but like exceptions in every rule. So a hairdresser sees all these scalps. They're not even like, they're just doing their job, right? Same thing with people that work with money. It's like, we don't, like somebody could have $1 million in their account. Somebody could have $10 in their account. I promise you, there is no like, nothing is being phased in our minds, right? It's just like, we got to help you get to where you want to go, right? Wherever you're starting from, whether again, you have $0 in your bank account or you have millions of dollars in your bank account, we are getting you where you have to go, not the next person. We'll deal with the next person when they're in front of us. But when we're with you, it's your time. And I think, and like every trainer, like they see different types of bodies. When they're with their client in front of them, they're dealing with their client. They don't like, they shouldn't care, right? And I think it's just that, to answer your question, it's that feeling of insecure. It's like, oh, what are they going to think? I promise you, nobody's thinking anything. There's not even a little thought. It's just like, how can we help you?
Yeah.
Right. So once you release from that, I think you can already get started from there.
It's funny because like our generation, they're all like, oh, I'm going to do it on my own. Like, and I look at everyone else in the past, everyone that I know that may have whatever, back in the day when people were like, I need to make money. I need to do like, hey, do you have a guy for that? Do you have a guy for that?
Yeah.
And like today, people don't often say, hey, do you have a guy for money? Do you have a guy for, they do for like the things that are complicated that they can't do on their own. But I feel people, or at least social media has made finances look too simple. And you know what? You said that when we're with the person, we think about their stuff. It's true. We do think about their stuff. What's great is that we have a process behind everything.
Mm-hmm.
We have like such structure behind it that helps helps us build those plans for the people that we work with. Funny enough, though, every client that I have, I constantly think about. I'm thinking about them all the time. I have nothing to do with them right now because we've structured it so well. But I'm always thinking about it. I'm like, I can't wait until we do the next. And I want to see what they're doing. How are they doing? Like, what are they up to?
And it's almost like your children. It's like, well, I don't have any children. So but maybe, I guess you can maybe relate to that a bit more. But it's almost like, you're watching them grow. You're just so happy that they're getting there.
Yeah, my excitement of seeing the portfolios grow. I'm like, wow, it's growing so much. And they're like, oh, how many of oh, wow, it's amazing. Like, that really brings a lot of enjoyment to my work day and life and period.
Exactly.
But, yeah.
So I mean, ironically that we're doing a podcast and obviously we're talking about finances and, maybe we're adding to the cause, but I think that's what a little bit our podcast is trying to deviate from, is not just throwing you should do this. It's saying, hey, if you want to do this, here's how we can help. Right.
Yeah. Contact a professional, demystify what's happening. Cause ultimately like that's everyone is, well, I say everyone, it's overgeneralization. Well, a majority of people are that's not their thing. Like they like to do other things instead of,
which is, it's okay, right? It's why we have a purpose in life. Like not everybody is meant to do the same thing. If not, we'd all be doing the same job. So that's the whole point of all these things. It's coming together and saying, how can we help each other? And, exchanging services, that it's so very common, right?
Yeah. And that's the importance of working as a team. I don't know. I can't add to that topic. It's pretty well rounded at that point.
Yeah.
So now that we talked about all this stuff, I just wanted to say that this episode is a two-parter. We're doing two parts. One is to know who we are, and the other part is to actually talk about something finance related. And running on into a tangent of, not a tangent, but like continuing what we were thinking about, like one thing that I wanted to ask, or at least I felt even myself when I was younger, what is one thing that you think is what people perceive as they have made it? That person is financially healthy, successful, they've made it. Like, what is the one thing that you feel it tells you that they've made it?
Well, I think it's the hottest topic in the market right now, owning real estate.
Okay, so having a home and owning real estate. Yeah, it's true. Ultimately, the perception that people feel that they've made it is definitely real estate. Now, talking about real estate, when we're looking at those things, what do you think are the ways to get to buying a house? And now for a quick break from the PLDC Wealth Explorer. Hey everyone, welcome back to PLDC Wealth Explorer. I'm Michael-Anthony, and I'm again joined with Gabriela Colacci.
Hey everyone.
Partner. Hello. And we last left off on a cliffhanger of what people feel is what it is that you feel is having made it in terms of being financially successful. And the answer was?
Yeah, real estate.
Real estate. So why do you feel out of every different financial tool that could exist to save money or become wealthy, why do you think real estate is the number one?
I mean, I think real estate is so widely spoken about. I mean, through every generation, whether you're 18 and starting off, or you're 65 and closing out your retirement and, starting to enter those retirement days. Real estate has always been the conversation. It's been what's hottest in the market as the last couple of months, but year or so, right? With the interest rates and everything. So yeah, I just think that everyone is either looking to buy their first house and figuring out, hey, when's that going to be? Where is it going to be? How is it going to be? Who's it going to be with?
Mm-hmm.
And a lot of people just associate real estate with automatically, I feel, being wealthy, right? How many properties can I have? How many doors can I have? Tenants equals revenue and all these things. I just feel like more and more maybe not more and more, I feel like it's always been around, but people have always said like, oh, somebody owns multiple properties, whether it be triplexes, duplexes, commercial real estate.
Mm-hmm.
Oh, they've made it. They have a lot of money.
They got money. Yeah.
Oh, they go to Florida every year because they own so much real estate and they could do it, right?
Yeah.
So I feel like real estate has always like been the precedent to like, if you want to get money, save up your money so you can buy these properties and you can be wealthy essentially.
You know what's funny? It's kind of like what we were talking about in the prior episode, where it's the basic. It's easy. It looks easy to do because the basic fundamentals of a necessity. I need a roof over my head. Okay, I need a roof over my head. What am I do? Rent or buy? So they buy. Okay, cool. Buying is pretty straightforward. I go to the bank, they lend me money, I pay my mortgage, and I get whatever. I build up equity. Oh, I have my property gain value. I could borrow against it. It seems a lot easier to do versus other investments. So that being said, why do you think? What do you think is the one major barrier people feel that they can't go over? Like they can't get beyond, like a limiting belief that they can't go beyond to be able to purchase a home. What's the number one thing that people often wait for? And they're like, oh, I gotta wait because this is not the right time because of X. Well, I think
interest rates, right? I think that's really what the market has been all about in the last, like I said before, a couple of months, a year or so.
Yeah.
Interest rates, right? Oh, I can't buy a house right now because interest rates are too high.
They're crazy, yeah.
Right? Yeah. Oh, and I'm working at the bank, that was a lot of the questions I was getting. At one point when interest rates were so high, I would actually stop getting those questions until they slowly came back, just down a little bit. And then I would get the question again, is like, oh, do you think I could buy a house now? Or, oh, do you think interest rates are going to go down? So people automatically associate the interest rates with a good time to buy, right? And I think that's something we're going to do. Well, I know this is something we're going to be discussing about today.
So let me share you a little bit something. You can't see it from where you're at, but I'm going to pretend that you can. So here's a graph of the last 40 years of interest rates that have been posted. So here, for example, back in the 80s, interest rates were crazy high, around the 20% range. Obviously, payments were, if you were going to consider a house that's worth $500,000, back then it was like a $80,000 house. So the payments were relatively similar to what we have today. But then as time goes on, interest rates are lower, and on average, it's always been above 7, 6, all the way down to recent years, the down to like the 2.5 and the variable, and the 4 to 5% range for fixed. So people often look at this and like, oh man, they only think back months, like, oh, a couple months ago, 2 years ago, interest rates were crazy low. But they don't ever think about historically back 20, 30, 40 years when interest rates were much higher because of what was happening in the economy. It's not the first time we have a recession. It's not the first time we've had, corrections in the market.
Sure.
But people often think interest rate is the one
factor leading them to either purchase or not purchase.
Exactly.
Yeah.
So what is it that ultimately happens? You need to buy a house. You're gonna buy a house. You need to buy a house. Right. So what do we do?
Well, the first thing you should be doing is planning, right? I think that's the fundamental of everything that you want to do going forward in your life, is saying, hey, if this is my goal, how am I gonna get there, right? And it's really coming back down to that structure. It's things I repeat so often. What do you want to do? How are you gonna get there? That's the first question you should be answering, right? So my number one piece of advice to anyone wanting to purchase a house or considering so many things about real estate is forget interest rates. Because interest rates, no matter what, during your duration, will unfortunately fluctuate, right? That's what drives the market up and down, amongst other things such as supply and demand, which we'll probably touch up a little bit about later. But forget about interest rates if you're really serious about wanting to purchase a home, because you need to structure your finances accordingly, right? You need to make sure, and we'll get into this, you have enough money to put down on the home. You have enough money to continue your living situation and to continue not only just paying your mortgage, but, you know, building for your future.
So there's 5 main tips I could give anybody to buy a home, but let's frame it in a real world scenario. Okay. So I have an idea of buying a $500,000 home, single home, very simple, like straight up. And I want to be able to afford the payments. I have a salary of $100,000 a year or something like that. So first tip, we need to have a high down payment. High down payment typically would be about 20%.
Correct.
If you don't want to have to pay the insurance percentage as well on top of your mortgage. So let's say we hit 20%. So how do we save 20%?
Again, 20% super important, because anything less than 20% of the purchase price of the property, we will have to pay extra in taxes and extra in default
fees,
insurance, thus increasing our payments
overall, long term.
Over the long term, right? So we just want to reduce these extra and I would say unnecessary fees, depending the context, obviously. Sounds very simple, and it is going to work and putting part of your pay, a good part of your pay, aside. You want to kind of start mimicking your living as if you were paying your mortgage while you're not paying a mortgage. So let me draw that picture for you. Assuming you're living at home, either with your parents or whoever you're living at home with, or even if you're paying rent. Assuming that you will now be taking on a mortgage today, you want to already start putting that mortgage payment aside, plus the additional living expenses that may include municipal tax, school tax, increase in utility expenses aside a month. So like that, you're already foreshadowing, hey, these are my monthly costs.
Yeah, you're conditioning yourself.
Exactly. So that conditioning will make you more free once you start, or will give you that breathing room once you start actually paying the mortgage and living in the property, right?
Yeah. Obviously, if you're renting already, you're kind of doing that, but you're spending most of the money instead of saving it going towards your rent.
Right.
Obviously, if that's the case, talk to a financial advisor and figure out ways to find money to be able to save.
Right.
Essentially.
But the most important concept here is if you're going to work, there has to be a portion of this money, whether you're planning to buy a house within a year or within 5 or more, 10 years, whatever the case may be for you, you want to start putting a portion of this salary that you're making aside. Very, very big rule here.
Okay, so tip number 2, it's limited credit history.
Right. So as individuals, we want to start differentiating having good debt and bad debt, right?
Yeah.
So good debt may be the mortgage itself because the value of the property is over time increasing.
Showing that you're able to pay.
Exactly.
Your bills.
Bad debt is eliminating any type of debt that is obviously causing you interest without any form of leverage, right? So credit card debt, right? You're buying something, you're taking forever to pay it. There's nothing in return other than maybe the Starbucks coffee that you bought 6 months ago, right? So eliminating those bad debts. And Michael, I'm going to throw that back to you.
Yeah.
Why is eliminating bad debt and taking care of your credit so important? And tips as a mortgage broker yourself.
So the most important stuff is when you're borrowing money for a home, your FICO score is quite important. So knowing that you have a good credit score is important because it'll actually unlock lower rates for you if you have good credit. So how do we get good credit? Pay off your Visa. Make sure it's paid off. Don't hold
Visa,
on.
MasterCard, Amex.
Visa, any kind of credit card. Never hold on to it. If you have any kind of lines of credit, make sure that you're paying them regularly, paying them down to nothing. If you have a car lease or a loan for a car, as long as you're making those payments and you're not missing payments, your score is going to go up. So all those things combined will get you great credit history, and it'll give you a high score where you could unlock really good rates because the banks see that you're able to pay your debts. They know that you will be a low risk for borrowing money for a home. Therefore, they'll be happy to give you a good interest rate. If it's not high, if the score is not high enough and it's really low, then they're going to be like, man, we're going to have to take a risk. If they default on their mortgage, we don't get paid. okay, let's charge them more interest up front so we get paid at least. And then if they default, well, at least we got paid and that was it.
Exactly. And I think that one point that I want to just re-highlight on, this is often forgotten, especially people who are a bit more lenient on paying their credit cards. I mean, I can't emphasize it enough. Pay your debts. You don't understand how they're affecting you. It's not just the interest, it's the credit, like you said. And things like your cell phone bill, Hydro-Quebec,
all that combined,
anything that has to do with a monthly payment, you need to respect. Like if you have insurance, car insurance, personal insurance, and you are late on your payments, this is affecting your credit history, which could ultimately be affecting the rates at which these rates that we've been talking about that are so important for people wanting to buy real estate. Well, it's affecting, like, help yourselves in at least saving a couple of basis points. Yeah.
So on tip number 2, the easiest thing, pay off your debts as much as you can. You'll be in a much better position to be able to get that mortgage.
And this leads us into tip number 3, which is having a good debt to income ratio. So again, Michael, bring us into your expertise. What does this mean? Tell us.
Debt to income ratio. So it's how much debt you are able to incur compared to your income. So if you're making $100,000 out of all that, how much are you paying in monthly monthly payments and stuff? So if you have low debt to income ratio, so you're making more and you're paying, like, I don't know, out of all that, you're only putting $20,000 on like living expenses and all that, and those are coming off credit cards, whatever. Then that would be your debt to income ratio. If you have borrowed money to buy a car and you still have money to pay on that, that affects your debt to income ratio. So anything that you're already paying for monthly is part of your debt to income ratio. If you have a low debt to income ratio, you will be, again, in a better position with the banks to be able to borrow from them because they see this person is not carrying much debt. I could give them tons of debt through your house. Perfect. Put it in. And what oftentimes people don't remember or don't know is that you buy your house today, super expensive. In 2-3 years, it's already gained a ton of value. And that is equity that you're able to essentially borrow against or show that you have value somewhere else. So if you're wanting to buy a car and you're also looking to buy a house at the same time, put the car off for a little bit, go for the house, wait a couple of years, and you'll be able to afford the car and the house together without having any issues with your
So additional question here.
Yeah.
What can you tell people who say like, oh, like I have 6 credit cards. I don't use any of the 6 but one.
Yeah.
Right? I have one for daily expenses. Is that good or bad for me?
It doesn't really matter, actually. So you could have 100 credit cards, and if they're all paid off, or most of them are paid off, and you only have one of them that you're carrying a small balance on, they're going to be okay with it. As long as you pay it off before you get your loan from the bank for the house, should be good.
Okay.
But if you hold on to it, then now your debt to income ratio is higher, and you may not qualify for the mortgage. So
that eliminates that question. You can have the credit cards, just don't carry the negative balance, or not the negative balance, but the balance that's hurting your pockets much more, right?
Exactly.
If your credit cards are at 0
Yeah.
and you're showing good methods of payment, you're showing that trustworthiness that creditors are looking for.
Yeah. Also having once you're down, like if you have saved for your down payment, that plays within the debt to income ratio because it shows that you have a lot of money liquid ready for the down payment, and it'll lower the potential value, like the purchase price of your house, because you'll put down more versus how much you're going to borrow. So that also plays with your debt to income ratio. So save money, don't carry any credit card debt. So already tip 1 and 2 are playing straight into tip number 3. So tip number 4, we're diving into affordability. So, being able to afford the carrying costs. Like, what do you feel about people that stretch themselves thin with having multiple payments across the board? Like, what do you think?
Well, I mean, ultimately, draw the picture for yourself, or paint the picture for yourself. Rather, stretching yourself thin is never a good idea. You're only hurting yourself in the short run, and in the long run. Don't be in denial about your situation. Just work to make it better, right? And that's super important. And genuinely speaking, you have to look at your. And this is often not said enough. You have to look at buying your house not only just as an investment, but is buying your house valuable or unvaluable to you,
okay.
right? If you're going to buy a house and it becomes so difficult to continue making your payments. But you just say you have a house, you're not benefiting yourself. The house is no longer becoming an asset to you. It's becoming something that is hurting you, right? So this concept of, oh, I made it, oh, I'm wealthy just because I own a home that I can't afford because either I didn't put enough down, either the payments are way too high a month compared to how much I'm making, right? Once you get qualified, but it's up to you to make that conscious decision of if it's a good idea or not, right? So, making yourself aware of, hey, this is how much money I make. This is what I want to do for myself. Maybe if I have kids, for my kids. This is how I picture my family or myself growing independently. If I add a mortgage payment of X amount of dollars, will I be able to continue painting this picture for myself, or will I not be able to continue painting that picture? That is a very, very hard question that you have to ask yourself.
So let's help those people out that want to be able to afford, that are having the hard time painting that picture. And it goes back to point number one, which is, again, savings. But affordability, and especially since we're in Canada, there's different government tools that they've made to our disposal. The RRSP, you could use part of your RRSPs to pay for your down payment. The government recently introduced the FHSA, First Time Homebuyers Plan for account, where it works like a TFSA, where you could put money in and not get taxed. It's after tax, and then you could put up to $40,000 of your own money, and then you're building interest off that. If you want more details, you're more than welcome to hit us up. I'm not going to get into the details of FHSA, but there's specific rules around it. And then your TFSA as well, you could put in money, contribute to TFSA. So there's the RSP, the FHSA, and the TFSA, that if you've been saving on point number one, you use it on those vehicles, you could invest a ton and then tax-free, take that money and use on your down payment.
So tying that into affordability is super important, right? Because one, give yourself the time to get there, right?
That's right.
Everything could be affordable for sure. Painting that picture could be affordable. You got to give yourself the time to get there. Don't set yourself unrealistic goals and unrealistic measures, because you're only going to stretch yourself out thinner, and you're going to make it harder on yourself. So make things easier on yourself by one, making things more affordable, giving yourself the time to do it, and continue saving. And then two is using these government programs that the government is purposely putting in place because Canadians are not taking the time to save for themselves.
Yeah.
People used to always ask me, or people still ask me, why do the government do this? Like, it can't be that there's a TFSA and the FHSA and there's interest free. Like, there has to be a myth here.
You know what's funny is that it's not enough these days just to put your money in the bank. You can't just put your money in the bank. You're making negative interest, because if you're putting your money in the bank and you're making 1 or 2% interest, you're not beating inflation. And inflation is going to bring the price of the house up. You're not going to be able to you'll save some money, but it won't be significant. That's why investing it in mutual funds within an RSP and FHSA, TFSA will get you higher than, depending on your investment style, higher than the inflation rate. And then you'll be able to afford the house much sooner. So I'm happy we talked about that. And, and then tip number 5, and this is just for more of a common sense thing, is lack of knowledge around buying a home. That's like the last thing that people typically overlook. They think it's like really hard. And I could give you pointers on how to do that, but what do you think would be your way to inform yourself? Like, what would you do?
Well, I mean, obviously, and I think this is something we said in the first episode and the second episode, don't do things alone.
Yeah.
Right. The same way you go see your gym,
my trainer,
your gym trainer,
to
help yourself get into the fitness goals that you're looking for. If you have financial goals, seek that financial professional. Don't think of it as help. Think of it as just getting yourself on the right track, right? And it's so important. There's so many things that, the government laws are always changing. Rules are always being modified. Subventions, there's so many programs that are being put in place. It's hard to keep up with everything. Even as us, as professionals, we're always being informed on a daily basis. So, by speaking and having those people that are being educated in areas where you're not, because it's not your domain, which is fairly normal, get that professional advice. It's going to go a long way. And then the other thing I can say is, and I'm going to say this again, decide where do you want to go and help yourself get there. It starts with you.
It definitely starts with you. And you know what? We don't have enough time to go into details about it now, but like one thing that is always hardest is asking questions, asking for help. It's true. And even us, like, probably would have the same issues, like having to ask for help, but you're only hurting yourself by not asking help. And that's what we're here for. That's what everyone else, like, there's people around you that are there for that. And just a shout out to my coach, Apex Coaching. Yeah, I've went from high percentage of body fat to a very low one. And that's only because he keeps me accountable and we keep track and we measure everything. Same thing for finances. If you keep track and you have somebody in your corner and they're there to check your stuff, good chances are you're going to be making out much better. So now that we talked about all those things, the 5 tips, let's recap them real quick. High down payment, so pay off, save money, put your money aside if you can. Limit your limited credit history. You want to make sure that you have paid your debts and that you have shown some credit history, because a better credit score equals better rate.
Credit.
And then your debt to income ratio, you want to make sure you're not carrying too much debt every month, every day, compared to how much you make. Money
you're bringing in.
Because if not, you won't be able to afford the payments and you won't be able to show the banks that you could afford a mortgage. So building that conditioning of like saving the money that would be for a mortgage, for a mortgage payment every month, that's a good way of doing it. And then affordability, talking to licensed people like us to figure out what are the best means to saving my money and which tools should I use based on, you know, my lifestyle
and how much house should I buy? How
much house should I buy? Should I be aiming for $1 million or plus, depending? And if you know what, if you want $1 million home, we'll help you figure it out. Most likely you can't do it on your own. There's family and people around you that could definitely help out, you know? So there's ways. And then lastly, it's lack of knowledge. Talk to a professional, talk to somebody like us, and we'll be able to help you guys find a way to get there, right?
Absolutely.
So that being said, that concludes our inaugural 2-part episode. And we like to thank everyone for tuning in. If anybody has questions or comments about what they saw today, where can they reach us? And
yeah, if ever you have any questions, I mean, you can definitely hit us up directly on the contact page through our website, www.pl-dc.ca. You can also send us an email. We have an Instagram page set up, so you can send us a DM through there. And we'll be posting everything in the video, as Mike mentioned earlier. But one tip I want to leave everybody with today after watching is start now.
Start now. Yeah, start today. Because if you don't start today, you'll never start.
Yeah. Absolutely.
So thanks again for listening in, and we appreciate everyone taking the time to watch or listen to our show wherever you may be tuning in from. And this has been the PLDC Wealth Explorer, and we'll see you next time.